Welcome to my YouTube channel. Here I'm starting a series on how to become a profitable trader. In order to do profitable trading, you must know about three trading components. One is method, second is money management or risk management, and third is trading psychology and discipline. So method is the trading strategy which tells you what stocks or instruments to buy and when to buy or when to sell. So this part falls under the methodology. Money management is how much risk you need to take on a particular trade, what kind of position sizing you need to create on a trade. And trading psychology, this is the most important part about successful trading. So trading psychology is nothing but how you can deal with things when they are not in your favor. When trading career is going sideways, how can you get disciplined? How can you stay calm and can pursue the markets with an objectivity? So today we're going to be talking about methodology or trading edge, and rest of the two things which we are just seeing here, we will talk about these things in our upcoming videos. So let's jump to the method. What kind of method we are talking about today? Okay, there are two types of trading. One is intraday and the other one is swing trading. For an intraday trader, the right approach is to go with trend following and mean reversion. Both of the trading are possible for an intraday trader. He can do both and he can be profitable by following both the things. But for a swing trader, I will recommend only doing trend following, because a swing trader, he has a higher time frame. He holds the position overnight, which has a gap up or gap down risk. So if he is doing trading against the trend, and if gap up or gap down comes against him, that will hurt him a lot, because he is risking a lot of money for a little gain. So today we will be talking about only this method, NR4. There are a lot of other methods also. We will talk about those things in our upcoming videos, along with the rest of the parts we need to discuss here. So methods NR4, NR7 and NR21. We will just be talking about it today. Why NR4? What is special about NR4? Basically, NR4 is nothing but the fourth candle which has the least range in last 4 days. So today, if market, the difference between highs and low is the least in the last 4 days, including today, that candle will qualify as a NR4 candle. This is a phenomena where a volatility expansion follows by volatility contraction. So when market is in range, this sort of candle forms where market is in range, and when the breakout happens, market moves in the trend's direction very quickly. So you can capture a momentum if you basically take the trade on the breakout. Okay, so this is where the NR4, NR7 and NR21 comes in place and help you. Here, what is NR4? By definition, NR4 is the fourth candle which has the least range. Okay, this is the visual representation. Day 1, day 2, day 3 and day 4. So there are two things which you need to focus when you are selecting an NR4 day. It should be having the least range in the last 4 days, and it should be an inside bar. So this particular bar is basically qualifying because it's an inside bar and having the least range in last 4 days, including today's range. What is the buy condition? Buy condition is you have to buy when the breakout above NR4 candle will happen tomorrow, because in this perspective we are just talking that today is the NR4 day, so tomorrow the breakout may or may not happen. So when market moves above high, that will be a breakout, and that is the buy condition we need to follow, with the stop loss below the day low. If the day low is broken down, you have to take a short position with the stop loss above high. This is where the buy and sell conditions are written. Buy conditions: buy above NR4 candle high, SL below NR4 candle low. Sell condition: sell below NR4 candle, SL above NR4 candle high. Sometimes it happens that market moves above day high, will trade for a while and then goes below the day low, hits your stop loss and starts moving below the day low. So you just have to take one trade in one instrument, because if we just talk about Nifty 50, you will always be, at least you will keep getting 3-4 stocks every day. So it doesn't matter if you take another trade in the same instrument, because you will be having other trades which can work in your favor. So you don't need to fight the markets. If your trade does not work, you need to move on to other trades which are actually your open positions which can work. So basically this is the rule you need to follow. Just look at this pattern. Okay, now how we will be able to filter out stocks for NR4, because if we talk about Nifty 100, there are 100 stocks, and we will not be able to analyze each and every stock every day, because it will take it requires a lot of time. Even if you're taking just 2 minutes a chart to 2 minutes for a chart, it will take like 2-3 hours every day, which is practically not possible for a person who's not sitting in front of screen all day, or who doesn't have much time. So basically this is where the scanner comes in play, which will help you, and within a single click you will be having the list of the stocks which has qualified for a NR4 day to day. So you can just select those stocks, make a watch list, and you can monitor those stocks tomorrow. If the breakout happens, you can go and take a trade in those stocks. So I will be putting the link of the scanner, what kind of criteria I have set here. So you just have to take that criteria, copy the scanner, and you can run the scanner after EOD every day. So you need to go to Charting website. I'll be putting the link also. So what is the scanner? Today's high minus low is less than yesterday's high minus low. So basically this is defining that the range of today is less than range of yesterday. Today's high minus low is less than 2 days ago high minus low. So today's range must be smaller than the range 2 days ago. And today's high must be smaller than the range 3 days ago. And another condition which is for inside day, today's 1 day ago high is greater than today's high. So basically this condition, 1 day ago high is greater than today's high, and 1 day ago low less than today's low. 1 day ago low less than today's low. So these are the conditions, and on behalf of these conditions, whichever stocks or indices fall under these conditions, they qualify for an NR4 day. Similarly, you can do this for the NR7 and NR21, but the inside bar condition will not be coming there, because this is only for NR4. So for NR7, the conditions will be latest high minus latest low less than less than 1 day ago high minus low, and that will be following for 6 days, because that is an NR7, and this condition will not be existing there. So these are 4 stocks. All you have to do is, whatever stock will be breaking out above its high or lows, you have to take trades in 4 days. So these are 4 stocks you need to keep in your watch list. Thanks a lot.